Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Today guys, we will replace the regular gold analysis by the Canadian dollar, because actually guys, as you know, and we have talked about it in the videos on the gold market, with previous 2 weeks market mostly has spent in a tight range, I mean gold market. That's why the all setups that we have discussed in the previous weekly research and some adjustment that we have made on the daily videos, they are still valid, and this market hasn't shown yet the major breakouts as to the downside, as to upside. So analysis mostly stands the same. So I think that the regular daily videos will be enough to support the view on the gold market. And right now it will be more useful for us to take a look at the Canadian dollar, because on the loonie we have really great setup on the long-term chart. Actually, this setup is not new for us, because we from time to time return back to discussion of this setup and recall this setup in our analysis. But the very significant progress has happened since our last discussion, and that's why currently it's just necessary to take a look at the Canadian dollar. So as this is the daily video, guys, it will be too long to talk on the pattern that we have right now, why we think that Canadian dollar should drop, what targets we have. You could read about this in analysis of the weekly and monthly chart. Here, guys, we will talk on the possible entry process that we could meet on the common week, because this is daily video, and based on a long-term analysis, the Canadian dollar should continue downward action. And to take the position with this plunge, we need to choose correct point where we could relatively safe go short. So right now the price of the Canadian dollar stands oversold on the daily chart, and also it's oversold on the weekly chart. This overall situation also is confirmed by the crude oil. So we'll take a look at the crude oil price chart. You can see the market stands at overbought. And actually, guys, if you're trading in commodities, here you could get very nice bread and butter sell setup on common week. So if you're trading the commodities, keep an eye on this situation, because very good thrust down, retracement up. Here market's approaching to the 50% resistance. This could be nice opportunity to make the scalp fast short trade on the crude oil. But for us, it's more important that the Canadian dollar right now stands at oversold, and we need some rally to sell into. So we need some retracement that we could use for taking the short position. We're not interested with the nearest level. This is the weekly pivot point, guys, because market oversold is on the daily and on the weekly. It suggests some deeper retracement up. And personally, I would be happy if we will get some kind of the ABCD pattern that could lead us to some levels that we will specify right now. So most interesting level to watch for is the first confluence support. It's 131.72, 131.90. This is confluence support. It also includes new July monthly pivot point. This has not been tested. And it includes weekly pivot resistance 1. It's also important because we know that when the market stands on the downward rally, on the bearish trend, all retracements should be held by weekly pivot resistance 1. If market stops retracement at the weekly pivot resistance 1, it just confirms, give us more confidence that the bearish trend is still intact. A careful reader, guys, if you're a careful reader, you will recognize similarity with the situation that we discussed recently on the Great British Pound. Also, take a look. We have here a side-by-side confluence resistance, and one of them includes pivot points. Another important area, guys, here is this trend line. Actually, guys, this is the lower border of the weekly flag pattern that has been broken. So here it takes the shape of the long-term channel, but on the monthly, on the weekly chart, it takes the shape of the flag. and this pattern already has been broken last week. That's why it's trend line is very important signal line, because as we plan the bearish trade, we do not want to see that market returns right back up inside of this play, because this will be not bearish sign. And take a look that this trend line coincides with our confidence resistance, where we intend to take the short position. Existence of the second confidence, 132.70, 133.12 area, is also very helpful, because you could use it as a barrier for placing the stop. So the stop could be placed relatively close or relatively tight to your position above this area. Because the market will return right back up inside of the flag that has been broken, this could mean that the breakout was fake, and it will be significant impact on the bearish scenario, on the bearish sentiment. This should not happen. Well, that is our view on the Canadian dollar right now, guys. It's currently no sense to take a look at the intraday charts, because you can see market is closed at the bottom. So sorry, the close price stands very near the lows as a weekly on the daily chart. That's why no patience has been formed here on the intraday charts. But what we will be watching for on the coming week is some kind of the ABCD pattern that starts to develop here. Maybe some other reversal patterns will form here that could point and confirm our entry level. That will be important for us on the coming week. Very probable, as you can see here, market really keeps very nice the harmonic swing. So very probable in this scenario, and usually it happens, the market just doubles the harmonic swing. So it could be some kind of the ABCD pattern, or even doubling of the harmonic swing leads us approximately to the same area, as you can see, around the trend line. That's an area that we will be watching for. That's why even from that standpoint, these levels should be suitable for taking the position. And if you will read the text of the weekly research, that weekly analysis, monthly analysis, you will see how harmonic setup stands, how different patterns agrees with each other. So it's very important. When the market creates a very nice harmony, it brings more reliability to scenarios and the patterns that we intend to trade. It's very important. When the market shows the smooth and blue reaction, you need to force any patterns to your eyes to make the trading plan. That's usually not very good. But the Canadian dollar right now shows very clear setup. So let's keep watching what will happen. So right now we have two interesting setups. First on the Great British Pound, as we said. Second is in the Canadian dollar.